Welcome to Insight. Today I'll share with you an update on the Australian industrial sector from the third quarter of 2015 and some insight into the activity that will shape the final months of a very busy year. In the investment space, there's been insatiable demand for Australian industrial investment opportunities at present. Headlining major investment activity this quarter was the sale of the core GIC and Frasers Property Australian logistics portfolio for $1.73 billion. Sales transaction activity picked up broadly in the third quarter. There has been more than $3.9 billion in major sales so far this year. And given the growing pipeline of opportunities in the market, this year is going to be another record year of investment sales activity. Now, given the buoyant conditions, a number of major asset and portfolio opportunities have been brought to market as vendors recognise the favourable selling environment at present. While prime yields have tightened, so too have secondary grade asset yields. The spread between prime and secondary grade yields continues to narrow as investors focus on opportunities to add value in the near term. However, the yield spread between prime and secondary grade assets remains above average, and investors will continue to explore secondary opportunities to aggregate assets and meet their return hurdles. Meanwhile, prime grade yields have tightened to record lows at the very core end of the logistics spectrum, though investors continue to be encouraged by the positive spread to risk-free rates such as government bonds, which remain very low, and also to international property markets such as the United States, where yields have tightened extensively in the past year. We continue to be encouraged by the evidence of improving fundamentals in the industrial sector. Occupier take-up has improved dramatically, and 2015 is likely to be an above-average year for occupier demand. This improvement in demand has been led by Sydney. Conditions for tenants have tightened considerably this year, and there are very limited opportunities to lease good quality existing space over 5,000 square metres in Western Sydney. We expect landlords of existing space to benefit from this with shorter let-up times and lower incentives. We also expect developers to benefit as tenants looking to consolidate their operations or grow their footprint will begin talking to site owners about purpose-built solutions. Meanwhile, new supply this year will be well below average and around 25% below last year. Looking further ahead, the supply pipeline is increasing in Sydney and Perth as a result of pre-leases, but this is being balanced by a lower supply outlook in Brisbane and Melbourne, while the rate of speculative construction has declined overall. From the JLL team, we wish you all a successful end to 2015 and thank you for your business this year. We look forward to updating you with a full 2015 wrap early in the new year and share our outlook for 2016. So don't forget to visit Insight for all the latest news and research, as well as current industrial sales and leasing opportunities.